Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session, mid to late session update for Thursday, January 12th, 2023. It's 2:19 p.m. As I'm starting the video, and I'm going to go over, just wanted to go over a few more charts. I answer some questions. A couple questions put to me in the on the comment section. Quick admin note: I've noticed, and somebody did point out, I noticed yesterday. There's the links, the tags. At the bottom of each post, I always tag it with the symbols that are covered in that post, so you can then reference. If you click on, let's say, Bitcoin, it'll show you all the posts from Bitcoin in chronological order. Also the categories, and so those aren't working. I'll have to bring in a programmer. I troubleshot and couldn't figure it out. Usually I can figure out what those issues are, so we'll get that fixed. But of course the site's still working. You can come in and check each post and manually navigate on the home page. All right, here's what I wanted to do. A quick update on the markets. I showed you or pointed out on QQQ that today, if we close green, we're green right now. I'll get to the Qs in a second. That would be the first time since back in the beginning of November that the Qs did it. And you can see we had one red stick in SPY. My candles are set to show you the total net, whether it's positive or negative for the day. So those are candlestick settings. You can have them show different colors depending on if it's open, close, high, if we close at the high or the low, or closed, I'm sorry, below the open for the day. You can also have them color coded that way. In other words, if you open at 100 on the security and close at 99, then it's going to show red. But I like to show mine whether it was a green close. I'll get to that in a second. Let me just show you this. This is the primary bear market downtrend line, a very, very significant level on SPY. And if I turn that off, you can see here we have the 200-day moving averages coming in. I talk about these a lot. They are very important averages for many years, watched by traders, and they typically denote bull and bear trends. When you're above them, you're in a bull market, and you can roll back as long as you want and see that, or a bull trend even within a bull market, however you want to define it. This is a daily time frame, so typically, it's a trend, the more the intermediate to even longer term trend. And when you're below it, the trend is bearish, and then not only that, but usually rallies back to it, especially on the tech stocks. I've noticed they respond. The tech stocks and the tech heavy QQQ respond even better. But I did want to point out, look, they're pinching. Sometimes it's the simple. I put them both up here. The X simple is the blue one right there, and the 200-day exponential is just a different calculation. The exponential moves a little faster, responds a little faster to prices, but you can see they're both coming in there. So the algos, the automated trading programs are likely to step in and sell, and I'm betting we'll probably we have an hour and a half to go. I think we'll see some profit taken today, and quite likely reverse it red. But if not, and look, and I often mention this, it's not unusual to see the 200s popped briefly once you cut below them, and then get the reversal. So, all I'm trying to say is that it's resistance, but it's not a hard level, because again, some people watch this one, the exponential, somewhat simple. Some are trading QQQ, but it is worth noting that you have that. And then if we pop them again, just a relatively small amount above. How much is that relative? So from where we peaked out today, or maybe I caught a hair under it, only about 1% higher, you have the primary downtrend line. To me, I'm hard short right now. I've been traded. Today's been a good day. The intraday charts, 5-minute charts, quick charts, even 1-minute charts. I bounced the Qs around, closed all those swing longs I told you about, all of them. Everything I took, mentioned here. Let me go back to QQQ. Starting out, taking those hedges in Amazon first, and then Apple, and then Tesla as first as hedges, and then telling you I removed all those hedges at the bottom of the recent trading range, and abandoned my intermediate term bearish bias and went to a long bias with the Qs. And anyway, we hit that. So there's that. There's the 200s. And all those are closed out because those individual stocks also hit my targets. And you will look at QQQ. I've covered that 60-minute chart quite a bit today, but I want to show you in the daily. Here is another trading range. I'm boxing in for you. Look how many reactions you had on this level right here. That's 280. So that's that same 280 target we were targeting there. So we went in this range from most of November and about early to mid-November all the way through mid-December right there. And that is in my opinion, a significant level. So you have price resistance, and yeah, a lot of bullish things happened recently, but this is what I was showing you here. 1, 2, 3, 4, 5 green candles. You can do it yourself. Check. This is the last time I just did a quick visual on this. If I missed anything, let me know. You had 1, 2, 3, 4 there, but no fifth. It was right here. This was the final thrust up in the great Fed-induced bull market right there. That was early into, it started in late October, but continued on early November, and that was it. So, you know, here's the thing on that. So, do we have to reverse because we're up 5 days and we haven't seen that in the entire bear market, not once? No. I remember taking, probabilities and statistics back in college, and one thing I learned, I remember them pointing out is, look, you flip a coin, you hit heads a half a dozen times, it doesn't and by any means increase the chance when you flip it again that you have a higher probability. Anything more than a 50-50 chance of flipping tails just because you hit heads 6. You could hit it 20 times in a row. Extremely unlikely, but even if you hit heads 20 times in a row, it does not increase your chance of getting tails anymore. It's still 50-50. However, in the market, it is. Because why? Why is that? Why? Well, because when you go up like this, you do have overbought conditions. You have traders who have made a profit and are likely, like me, like us, hopefully most of you, that want to book those profits, especially in a bear market. And so, yes, it does increase the odds. Doesn't mean we have to close red today. It just increases the odds. That, again, near term. When I say near term, you just go to a very short term chart. You can go to a 15-minute chart, a 60. Well, that's what we've been using, the 60-minute chart. And I always say that overbought is not a sell signal. But what I really like to see is overbought. And on my chart, my 60-minute chart, I talk about this often. I don't just use the defaults that the charting platforms give you on every security. I look and I see this is the 70 level that most traders say, oh, QQQ is oversold. Well, guess what? If you try to start getting out of your longs or shorting every time you hit that, well, quite often it went much higher than that. So the line for me is just under 80. It's 79.74. That's to me, at least in these current conditions, where QQQ starts to become oversold as it approaches that level, and then all the better when you get a high followed by a lower high in the indicators, i.e. negative divergence. So that divergence, the thing is that divergence can play out for more than the pullback that I showed you earlier. I give you a minimum and likely pullback target. That's all I'm looking for right now. I think they'll step in and buy it if you get there, 274.81. And can we punch up through there? Sure. Possible. Is it likely? No, based on the divergences, the near-term overbought conditions, and everything else I just mentioned. All right, so not only that, again, look at the market leaders. Apple. This was this was a pretty big target for me when I was eyeing 134.61. You had quite a few this was a very important low. When it broke, they tried to backtest it and regain it, got rejected, and you had the final thrust down to a new bear market low in Apple. And so you can see it right there. And then they recovered that level. However, that is still was support, and it becomes resistance, and we're close enough to it that a lot of eyes probably see it. And so effectively it's hit. Sellers tend to step in a little bit early, quite often, especially on a well-watched level. And you have also on Apple negative divergence. So that 60-minute divergence could set the stage for an even deeper pullback. Now look, I've been talking about, we've seen a lot of bullish developments, including and not limited to this Apple bullish falling wedge breakout, the recovery, the breakdown to new lows, and then a reversal back above there. A lot of shorts got trapped in that. Undoubtedly, I talked about it being a bear trap. We broke out on the ranges, blah, 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 blah. So a lot of a decent case can still be made for more upside. you can probably tell by what I'm, talking about today and what I'm doing. I kind of morphed away from swing trade mode. I've been swing trading long for the last couple weeks here based on all those things I just covered. Hit that, what I call my initial final target, that 280 level, and so closed out those swing trades, and I'm just now kind of back into active trader mode. I'm looking to maybe game what I think will be a likely pullback here and then get back in. If Apple comes back to 130.42, that will likely coincide. That'll be my re-entry point, and then swing it up here to these downtrend lines with a stop somewhat below. By the way, just because I've been talking the bull speak lately, do not, please don't, or please realize I have not by any means abandoned the longer term bearish case. This is the weekly chart of QQQ. We are below the primary downtrend line. We are in a bear market. We are below the 200 days. We've tested, and as I told you, QQQ does a really good job. Tech indexes acting off the 200 days. So there's where you broke it. There was your breakdown candle, back test, back test, back test of the 200. Simple, then the exponential, fail. Rally up, back test, failed at the 200s again. Rallied up, failed at the 200s again, rallied up. In pre-market, remember I highlighted it. It doesn't show on here because this is not pre-market trades being shown. We hit it to the button right there, and that was our last objective short entry. So a lot of rejections there. This is a bear market, and so everything I just talked about, the bullish events over the last few weeks on the 60-minute charts and everything else, yeah, you have these weekly charts that say that just may be a bear market rally. And the thing about bear market rallies is just when they convince the masses it's safe to get back in the water, bang, that's usually when the next the hammer comes down hard and the next leg drops. So yeah, it's I don't know which one it's going to be. I can make a bullish case as I had. We had positive divergence on the weekly here. Maybe it's possible the bear market was over. I'll tell you this. Until and unless we can clearly take out those 200s, especially on a weekly closing basis, take out the downtrend lines and SPY and QQQ, and there's some resistance above. I'm driving, when I'm long, I'm driving with one foot on the gas pedal, but the other right above the brake, ready to hit and reverse. So that's it. I'm just trying to say is, I don't trust bear market rallies as far as I can throw them, but I'll trade them because they're profitable. I don't like giving back profits on short trades, and I don't like missing out on rallies. So, yeah. Anyway, so hopefully that's not confusing. Kind of tell you, I try to do my best to um, delineate my very short-term positioning and thoughts on where the market's going against the intermediate term. So short term is really hours to days. That's what I'm looking at right now. I'm short into a close today. Intermediate term would be days to weeks. Again, the case can be made, and I'm leaning that way right now that we'll go on and take out these levels after a pullback most likely, and maybe go on and have a little more upside in this rally. But I don't want to position that way. I'm just positioning right now for what I think is going to happen today, over the next few hours, and into tomorrow. And same thing this morning. This is repetitive, but we had a chance in pre-market, and then you have a chance right now. That's that second post, and we've been bouncing on that 280 level all day, that resistance. And say what you want about technical analysis, but it's hard to argue that that's not a level. I mean, if you turn on pre-market trades, they're not on here. I'll turn them on for you, and you can just see what that resistance level, what it's done. Here was this morning, and remember I had the line a little bit above 280. This is a brick wall. This is where the sellers are going to come in. More and more see it. If you can take it out tomorrow, next week, and clearly put it in the rearview mirror, and then do the same with the SPY. Let me get to that, because somebody asked me to give targets on SPY. Let me turn this off. Edit chart properties when it's selected. Okay, I'm going to get to the other things. QQQ, and then SPY. Somebody asked me for pullback targets in one of the comment sections. SPY I already covered, is at the 200 days. If we do get a pullback, here's what the 60 looks like right here. You've got a nice clean uptrend line. We're still above it. Remember, there are two ways, in my book, two objective entries for shorting. One is a break of support. In that case, that would be in SPY at least, a break of that uptrend line. And the other is a rally into resistance. Now we've got, like I showed you, just overhead. And that's why, even if they hold it up today and hold the futures up tonight and pop and gap up tomorrow, it's still an objective short. I would just add to my short positions because now you have the uptrend line on SPY, you have the 200 days as I highlighted a little bit above, and all that other good stuff. So now, anything much more than that, if this is a start of a much more powerful rally, they may burn through these divergences by taking out, burn through means you take out the previous highs right there, these previous reaction highs, and then you no longer have divergences, and then you pop the trend line and you could run. That's certainly a possibility. You can see it today. A lot less fear about what Uncle Powell's going to do at the next meeting, because the CPI number, although it wasn't super soft, it wasn't hot either. It was kind of Goldilocks, right there, and right around expectations, from what I can gather. Okay, I'm sorry. Levels. Here's my SPY 60. Let me just update it for you. Move that line right here. I did that because you have this reaction high, just like in QQQ. You have quite a bit. If you come back here, look at all those candles right there, reaction low there. And so that is if you're looking to short the S&P, there's a pullback target there. However, remember, if you come down to that level, it's also going to trigger break this bearish rising wedge, which then could take us down. I'm going to move this line right now up a little bit right there, and I did that to cover the bottom of the gap, and that also comes in right there on that candle, and there's the top of the gap. So these are all potential pullback targets, about 390, 355, 390, 70, and a max pullback target right now, which would be a great area if you rode shorts down. Let's just say you trailed stops down, or you're going for this all the way back to test the top of these trading ranges we just broke out of. Buyers would almost certainly step in there. If they don't, that's pretty dang bearish. That would mean that could be the final leg down. It's getting underway. So 387.17, obviously you'd want to step in a little early, cover your shorts a little early, because the reversal would probably be fast and get in some longs. So there's your SPY targets. That's all they asked for, but if you want to look at ES, we can do that too. Make the video not too long here, but I'm going to give you the 60. Let's go back just 2 months on the 60. And I might have got this one out to you today. They had this little minor trend. Remember, all this is whippiness around the CPI number today, but this is right here. This one is your uptrend line, and that's exactly what I just showed you on the 60-minute chart of SPY. So if you are trading the futures, and you want to stay long and try to hold for a breakout above this resistance level right here, that 421, that would be your next target up here. It's about 40.84. However, this is support about 39.74, which comes in with that trend line. So break of that, it's going to take you down here. First target 39.45, and there's the top of that trading range. So this would be an ideal buy point or re-entry on longs if you are going to fade this rally, and you're going to a little more aggressive. So this is the minimum targets here, and then my max pullback target, and a very objective place in my opinion to reload on longs if we get there. And again, with stops, if I'm wrong, stops somewhat below. Give it a little room. That's what they do. They try to run stops by taking stocks and the indexes just below support levels to clear out, suck in some new shorts, and then, it's called a, stop rate. Alrighty, let me give you, somebody asked about energy. Let me do an update on energy. XLE, you guys know my thoughts on NatGas. I got that out to you today. XLE on the daily recent, we took out this bullish falling wedge. Remember, we hit first target, and we had several pierces below. My T1 level was at 83.62. Let me fix these. Let me zoom in there for you. And then I pointed this out at the time. We had really nice support there, and this remains. That I'm gonna right now. I'll leave my T1 there just because that's what that was. Not confused. I'm gonna put a line there, and I'm gonna set an alert. Don't know when that alert's going to trigger, but when it does, that's a sell signal for sure on XLE. But in the near term, what happened is we had this, and I believe I pointed out recently, we had a downtrend line followed by the support level right there, and we broke out the other day, back tested 1, 2, 3, and we've been moving higher. So that's bullish right there. Unless this breakout fails, that was a descending triangle pattern, and there was the breakout. And I don't have much of an opinion on that one. I'm not long. I mentioned covering shorts here because I thought we'd get a bounce, and this one just kind of traded. Oh, by the way, it also traded in that range right there. And that's also bullish right there, and then popped. Remember, we are in my opinion, still in the early stages of commodity bull market, and this whole stock market thing. You're going to have that, what I call that negative feedback loop or vicious cycle, where the masses believe that inflation is now under control, and the Fed did their job, and the stock market will rally as such. And then as it starts to rally, then you're going to see commodities sooner than later rally and take their next leg up, like natural gas. I'm sorry, this is UGA gasoline right there. And if it can pop 61.12, it's going to run up. And so this is the inflation trade. So keep one eye on the markets, trade the markets, but know that there's oil moving up lately, US OILK, and this is another crude oil ETF, USO rallying. Um, and I noticed a lot of the ags are moving today. Wheat's still hanging in there. I threw that one out as a trade idea, and that was CW. It was WEAT that was on that divergent low. Basically, made about an equal low right there. Let me just show you the wheat futures because that was a trade idea recently, and still is if you gave it some room. This is what wheat futures look like, ZW. So we had that pretty much now almost a triple bottom there. It's holding that 724 and a quarter support like a champ right there, and pretty strong positive divergences on this most recent low and successful test of that level. So remember, this was a target, and I said, probably get a reaction there. 798.34. That was the price target from. I cannot remember now where I threw this out. Was either back here on that, on the wheat based on the daily chart, or the breakout in the back test here. Either way, we hit that target, pulled back, and so far we're holding support. Bearish if wheat does that and the divergences get taken out, but I think we're going to see money start to move back into these commodities soon. And you can go down the line. JJU, hold on here. JJU, aluminum moving up lately. That's the aluminum sector. DJP, broad-based commodity TN. NIB, cocoa, still rallying. JJG, a generic grain ETF. And so forth and so on. So this is agribusiness. These are stocks that related to the agricultural business. So there it is. So a lot of things, wood cut. These are the lumber and timber and forestry ETFs. I know lumber's been moving up lately. Lumber futures, soybeans. Look at that uptrend line. And so that's it. So this is inflation right here. All of these together are inflation. And so the market might be fine. It might want to rally a little while, put in the recent bullish stuff on the shorter term charts and even the daily. But the more these commodities move up, food, energy, the more it's going to put pressure on the Fed to stay hawkish, and then that of course is bearish for the stock market. Oh, let me update the dollar. Dollar broke that uptrend line, USDOLR dollar index. See there, we have the primary uptrend line right there. That broke, and so unless it can recover soon, remember I pointed out it's a matter of we're going to bounce there or undercut it, and as long as we have these divergences, it sets the stage for a pretty decent rally in the dollar. We're not getting it today. Dollar's a little weak, and that's because the CPI didn't come in hot. If the CPI came in hot, the dollar would rally more because that means the Fed would have to be more aggressive, meaning raise hikes more. Remember, what makes a dollar go up and down against other currencies is our rate relative to our interest rates relative to theirs. So this shows that was the market today took the CPI number as bullish for the markets because bearish rates doesn't give the Fed any more reason to stay aggressive or to get more aggressive. So the dollar fell and stocks are rallying as such. However, that's you can recover. There's a lot of components in the dollar index, the biggest being the euro, and that one has taken out this level. That's a breakout. So the dollar broke down, the euro broke out. So we could see more downside in the dollar to that, unless it reverses, unless it gets back above that trend line and this breakout fails. Take it on face value if you want, but as of now, that's a breakout in the euro right there. And you can see, however, long term we're at some pretty decent resistance on the long term chart. I've had this line here forever and a day. So, and the euro is getting pretty stretched, pretty overbought here on the weekly as well as on the daily. And you've got this negative divergence. So I still continue to maintain a pretty significant reversals coming. That means dollar up, rally in the dollar, drop in the euro. But can't make a solid case today because we broke those levels. And then you have the Japanese yen, yen US dollar here. No breakout yet. The dollar needs to break out above this. This is the second largest component in the US dollar index. So right now it remains in a downtrend in this price channel with positive divergence, which tells me a reversal is very likely and almost imminent at this point. However, we could come all the way back down to here. The yen can continue to fall. If it gets there, look at that. That's a nice uptrend line right there. Primary uptrend line in the yen, but it's quite a bit lower. So anyways, there's no hard, well, there's definitely no buy signal on the dollar today. If anything else, it's a sell signal for now. So I just wanted to point that out. And until we get that reversal, if if you're looking to short gold and silver, add to any of those shorts, you need to see that break out. You need to see the euro reverse and fail, and the dollar, case for a rally in the dollar. All right, I already told you crypto's going to move. When the market's risk on, crypto's going to rally. You're always going to get more bang for your buck in a crypto trade. Meaning it goes up more when the market's rallying in percentage term, but also cuts both ways. So you beta adjust that down, just like natural gas. If you trade whatever your number, if it's 1,000 or 100,000 or 10 million, you're trading in futures at a time in QQQ. It doesn't matter. You take a whatever that is, your number. I'll use QQQ or SPY as a baseline. You take a fraction of that, maybe a third of that in natural gas, and maybe even a quarter of that in crypto. And it gives you the same, you just have to get a kind of a feel. And because it's not about percentage gains and losses, at least not in my book, it's about the dollar gains and losses. That's what's important to me. So there it is. And let me just wrap up with the market leaders. Apple, okay, Apple at that 134.61 resistance I already covered. Microsoft at resistance level, pretty decent when you look at it here. It's more of a resistance zone. You had a lot of support. Broke it there, back tested from above, got above it for a little while. There's still enough reactions in here that's resistance, and if it can pop that, yeah, 245.80 is the next level. But look, this is a pretty this rally is getting a little bit long in the tooth when you're on the 60-minute time frame. 70 does do the trick usually for Microsoft, maybe a little bit above there. You can see if I put a blue line there, that's the magic number on the RSI that says, look, when Microsoft gets to that level, it's overbought. And that's usually when you want to book profits on long or start looking around for short entries. Circling all those highs that came with rallies up to that level in the RSI. So it's simple. Now I'm going back, what is this, into October all the way, September actually, early October, and I just circled every time the RSI hit this level, and I'm showing you now what happened each and every time. Now, yeah, we were in a bear market and have been and maybe still are. Maybe this is early stage bull market action. So the problem with shorting an RSI, if that's the case, is it can become more overbought or stay overbought for an extended period of time. However, nothing here tells me that this is, if you're looking at Microsoft, it's really actually traded, for the last several months in a big sideways range, up, down, up, down, up, down. It's gone nowhere. So, the MO says, hey, get out of your longs or short Microsoft when it gets to that level, especially into resistance. So Amazon, there it is. Yeah, that was my target all along. Downtrend line, initial target, trend line plus intersecting price resistance zone right there. There's a pretty steep uptrend line. And just like everything else, this rally is getting a little bit long in the tooth, just like it was right there. It was oversold there. Oversold there. You got it. So, all right, that's that. And I get repetitive and I cover the same thing over and over and over. And I do that because I've done this long enough to know that a lot of people they just don't want to short after 5 days with the market being up. Early on I kind of started to learn to become contrarian. I don't, I won't become contrarian just for the sake of being. If market goes up 5 days, that doesn't mean it can't go up a six. But what I've learned is, to kind of get the ebb and flow in the feel of the market. When everyone wants to buy, again, nobody wanted to buy Tesla here when I kept highlighting it. Nobody wanted to buy Amazon. I'm speaking generically. Obviously, I'm talking about the masses, not people listening to my voice. But most didn't want to buy Amazon here multiple times at that key $83 support that I kept highlighting, especially on the long-term chart. But they want to buy it now, and this is and for that reason, this is when I want to sell it. It was which is what I did, and I would like to get back in, especially if we get either a pullback to that support, maybe down here. I think that's a good buying op or re-entry. Let me mark that level right now. So the next objective buy points on Amazon, in my opinion, are pull back to that 90.36, a little bit above. They call it 90.50, and or down to there, but not below this level here. That happens, I just sit back. We'll see. We'll talk about it, and then especially if that happens, and then on a break above the downtrend line and that resistance zone there, it tops out about 98. Minimum target, if that breaks out, minimum target would be about 102 right there. And at that point, I'd probably turn my focus to the daily chart, maybe get some downtrend line going here that I don't have, which is right about, that's the same one on the 60 I just showed you. I just put it up on the daily. And there's a level 101.45 next resistance, and then above that. So we'll do this. I can do this all day long, and I will. I'll sharpen my pencil and give you some additional targets. But first things first. Let's see how the market reacts. Let's see if we can get the pullback I'm looking for here. Get back in, and then I said I'm kind of taking it day by day right now. Like I said, I can sit there and make the bearish case in the long-term charts. So I'm being a little cautious. So I've returned back into active trading mode after exiting swing trade mode today when those near-term targets were hit. So I'm taking it day by day, minute by minute here, and I'll let you guys decide, how to be positioned. And if you don't know what to do, there's nothing wrong with staying out of the market. Just be careful. Just don't get married to any one bias, bullish or bearish right now, because I think the market can break either way from where we're at. I'm going to wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.